Shares of Oracle down nearly 12.5% after they reported their Q2 results yesterday. We'll jump into these financials, take a look at comments made by the management team over at Oracle, jump into the income statement, balance sheet, and statement of cash flows. And as always, take a look at the technicals. This one has broken down from a uptrend, and we'll see if this one is coming down to a buying point. As always, if you're new to the channel and find this type of content valuable, be sure to hit that like and subscribe button below. It would mean a lot. Oracle stock seeing a huge sell-off down to $100. Over the past 1 year, this stock is still up close to 24%, and year to date, again, still up over 20%. Not the same gains you've seen at other enterprise names like a Microsoft, but still, despite a huge sell-off in this earnings report and even in their Q1 earnings report, for the stock to still be up 20% is pretty substantial gains on a year-to-date basis. You do get a close to 1.4% forward dividend yield, and now it's forward priced earnings coming down closer to 21 times. I have a 10-year price to earnings on a gap basis pulled up for Oracle. You see historically this one likes to trade somewhere between that 16, 17 up to maybe even 20 times on a price to earnings basis. You see over the last trailing 12 months has gone closer to 30, 31 times. Certainly that was a bit too expensive in my opinion from a valuation perspective, but you see on a forward basis coming back in line closer to 21 times, still probably a bit on the higher end, but again, more closely linked to its fair value at least now, which I would say is closer to 18 times on a price to earnings basis. Now, why did the stock sell off huge today? It was likely due to a revenue miss by close to $110 million. So your top line revenues came in at $12.94 billion. That was good for just 5.4% growth year over year. Certainly on a top line basis, that is very slow growth, not really going to impress Wall Street with just 5% growth on a year over year basis. In terms of EPS, that did beat expectations by just 1 cent, coming in at $1.34 on a non-GAAP basis. Now, in terms of their performance obligations, this is how much revenue Oracle expects to receive really over the next, I believe, 12 months. That is coming in at $65 billion. That actually exceeds their annual revenues, and we'll get into that when we take a look at comments made by the CEO of Oracle. In terms of cloud revenue, this is really what Wall Street is looking to predict and having their eye on over at Oracle. Cloud revenue is coming in at $4.8 billion. That was up 25% on and 24% on a constant currency basis. Cloud application revenues, that makes up roughly $3.2 billion of their total revenues. That was up just 15% year over year. In terms of cloud infrastructure, that is a much smaller revenue segment, but growing at a rapid clip at over 52% year over year. This is their generative AI segment. That is really what is propelling this growth at such a rapid clip. Now, when it comes to forward earnings estimates over on Wall Street, Oracle is expected to post $5.56 for the upcoming fiscal year ended in May 2024. That would be roughly high single-digit growth, close to 8.5%, and then Oracle in the next few years expected to grow in that low double digits percent. Really not stellar growth by any means, but again, doesn't trade at a huge valuation, at least not anymore after seeing a huge sell-off. Yeah, closer to 18, 20 times. I think that is more in line in terms of a forward price to earnings for Oracle. I think the real question for Oracle comes down to their top line. Believe it or not, it's really how they plan to grow their revenues. That is expected to grow in that high to mid single digits over the next few years. It's really, they're looking to accelerate top line growth over at Oracle. Certainly their valuation isn't overly expensive, and as they're able to grow their net income margins and operating margins, as we'll see they did in this quarter, that certainly can help bolster up their price to earnings in the upcoming few years. Now, in terms of comments made by the CEO, she says, demand for our cloud infrastructure and Gen AI services is increasing at an astronomical rate. As a measure of that demand, Oracle's total remaining performance obligations, or RPO, climbed to over $65 billion. That exceeds their annual revenues. Again, that is a very bullish statement by the CEO. And again, the Oracle chairman, CTO Larry Ellison, saying demand is over the moon. That is in relation to their data centers. That is growing at a very rapid clip and operating them inexpensively because they're highly automated with the identical high performance RDMA networks and the same set of autonomous services. So very bullish comments really by the CEO and CTO over at Oracle. They certainly believe this demand over at Oracle for their cloud businesses is really expected to stay, and not only stay, but grow. As you see, they say service demand continues to grow at unprecedented levels. So business is good and getting better. That are certainly bullish comments made by the management team over at Oracle. I'm not sure if Wall Street is really fully buying into that, considering their top line growth has really stalled out at just at 5%. But we'll see if those bullish statements by management can really come to fruition over the next few quarters. In terms of revenues, those came in at $12.9 billion, again, up 5% year over year. I think Oracle doing a pretty stellar job at controlling costs and really fixing everything in their income statement underneath their top line revenues. As you see, operating expenses grew at just 1% on a year over year basis. Their cloud services operating expenses did grow at roughly 20%. That I'm guessing likely has to increase in line with your cloud revenue growth, and so that grew at 20%. But really on this R&D, sales and marketing, and G&A side, that's where Oracle was able to really control costs, as those didn't really budge on a year over year basis. And so your total operating expenses came in at just $9.3 billion. Last year we were at $9.2 billion. The good thing is that is a smaller percentage of your total revenues, and so your operating expenses make up just now 72%. Last year they were closer to 75%. And yeah, you do the math on that, your operating incomes will actually rise. Your operating margins coming in at 28%. Last year we were at 25%. And so this is good to see. Your revenues growing at 5%. You want your operating income to grow faster than revenues, which it did at over 18%. And then you want your net income to, again, grow faster than your operating income, which it did at over 44%. So net income for Oracle coming in at $2.5 billion. Now with net income margins of 19%. Last year we were at net income margins of just 14%. And so when you see it having a price to earnings on a forward basis of closer to 20 times, yeah, historically that is higher compared to its previous 10 years. But keep in mind that Oracle is also increasing their margins over at their business, both net income, operating income. And so higher margins on an earnings side really have to be rewarded in one way or another. And certainly with a slightly higher price to earnings multiple going forward, that is one way I think Oracle stock can be rewarded for these increasing margins. In terms of their shares outstanding, that is still slowly rising, not crazy amounts of dilution, but again, it is slowly still going up over at Oracle based on their stock-based compensation. Moving on to the balance sheet, this is a 6-month picture looking roughly in line to where we were 6 months ago in terms of a balance sheet over at Oracle. Cash and cash equivalents coming in at $8.2 billion, down just a little bit from a year ago, or closer to $9.8 billion. Current assets coming in at just under $20 billion. In terms of total assets, that is well over $134 billion. Now, they do have more current liabilities than current assets. From just a quick glance, you see this number is $24.5 billion. That is more than their total current assets. But the important thing to note is this $8.8 billion worth of deferred revenues. This is services that Oracle has provided but not yet collected revenues on. And so they have to include this as part of their current liabilities. And over the next really 12 months, this will get recognized as revenues and then eventually as assets. And so if you strip this out, their current liabilities is sitting underneath their current assets, which is good to see. The one point of concern, really, in my opinion, for Oracle is their notes payable, and this is really long-term debt over at Oracle. This is sitting at roughly $82.5 billion, so a substantial portion of debt. They did draw on some debt, I believe, late last year in order to complete an acquisition, and so you see sitting on nearly $82.5 billion worth of debt. They don't have a ton of cash, and so their cash debt ratio really not looking good. But from a 6-month picture, this is trickling down at a pretty good clip, I'd say. For 6 months, down nearly $4 billion. That is impressive to see over at Oracle. Certainly, this is probably causing them to pay a decent amount in terms of interest income. And so, in my opinion, I think Oracle should look to dwindle this down sooner rather than later. Apart from this long-term debt, really nothing to be overly concerned about with the balance sheet over at Oracle. In terms of cash flows, we bring down that $4.9 billion net income number. This is for 6 months ended, so keep that in mind. And we have a year-over-year picture in view, and so we get to add back some depreciation, amortization, stock-based compensation. We get to net cash provided by operating activities for 6 months at $7.1 billion. That is down just a little bit from a year ago, actually, at $7.2 billion. And so cash flows over at Oracle not trending in the right direction, actually, even though they generated substantially higher net income. They used nearly $2.8 billion in investing activities. You see last year in these 6 months ended, they completed a fairly large acquisition at $28 billion in terms of net debt acquired. They repurchased nearly $600 million worth of common stock, issued relatively the same amount, and then paid off close to $2 billion in terms of dividends. They are repaying nearly $3.5 billion worth of that debt on a 6-month basis. In terms of increase in cash, they actually blew through close to $1.5 billion in terms of cash. I think majority of that is gone to this debt payment, as they're looking to, I'm guessing, expedite this debt payment, considering, look, Oracle is in no place to really do buybacks similar to these other big techs. You see Microsoft, Google, even like an Amazon. Oracle, frankly, just has too much debt right now that they can really even consider doing any major stock repurchases. They're first looking to dwindle down this debt. And so that is really disappointing over at Oracle, that they can't really offer any share buybacks considering how much debt they have on their balance sheet. Moving on to the technicals over at Oracle, this was locked in an uptrend for nearly smack dab a year, from October 2022 all the way to really October 2023. This was in an uptrend, and then last earnings they had a big decline and then decisively broke through this trend line, came up, retested it a couple of times, and now has again decisively broken underneath this trend line. And so it's safe to say this uptrend over at Oracle is over. We'll clean up the lines here in a bit. And so certainly you have resistance still up here closer to $115 per share. If Oracle can come up here and break above this $102, yeah, I could see a rally to really fill this gap, and then again see resistance at this level closer to 114. I think what is more likely for Oracle is to come down, post another few red candles, come down really to $96, $97 a share, see some support here. I think from a long buy and hold perspective, actually this wouldn't be the worst spot to really come in here, maybe pick up one share or even fractional shares. Again, this is a spot where I wouldn't unload a full position into Oracle, but if you are long this stock, if you do want to start a position in Oracle, certainly near the bottom end of this channel, that could be a good spot to really start a position in Oracle. At this point, the valuation really wouldn't be overly expensive. It wouldn't be a steal deal, but again, at 19 times, 18 times, a forward price earnings would be relatively in line to where it has traded before. And so you could look to come in here, maybe pick up fractional shares or one share of Oracle, and then if it comes up closer to this, you could look to take some profits near the $113, $115 range. I think if Oracle comes here and breaks below this $96 support, I think is very likely it's coming down closer to really $88 to $90 a share. That's really where a large level of consolidation is for Oracle. Not a whole lot of support at this $96 range. And so if it does come down here, pretty good chance it comes underneath and then sits at closer to $90 a share. At that point, the technicals would have been pretty ugly. It would have made a series of lower highs and lower lows. And so from a technical perspective, that would not really be a buying opportunity. But from, again, a long perspective, closer to $90 a share, I think the valuation on Oracle would be fairly compelling in my opinion. And then if they can continue to have these growth rates really be sustained over on their cloud business, if they do really see Gen AI demand continue to stay strong over at Oracle and then perhaps even get better, if they're able to grow their top line revenues by just even a few percentage points closer to that double digits range, yeah, then closer to $90 a share, I think this stock can be a great long-term buy and hold. You'll get a small dividend while you're holding, and you'll get dividend increases every now and then. And then I think from a balance sheet perspective, if Oracle can come in here and clean up their balance sheet in terms of that debt, that would certainly make a compelling long-term buy and hold. That was my take on Oracle Corporation, a big decline. But from a long perspective, I think you can be a little more patient and maybe pick up shares of Oracle closer to $90 a share. I think that would be a great long-term buy and hold place to really start a position and accumulate over the long term. That was my take on Oracle. Let me know your thoughts in the comment section below. Are you coming in here and picking up shares at close to $100? As always, thanks so much for listening, and I'll catch you guys in the next video.